What's up, everybody? It is Sunday night, August 22nd, about 8:24, 8:30, whatever, Central Standard Time here in Texas. And the futures market for the S&P 500 has opened. It opens at 5 p.m. my time. You can see in front of you the E-mini S&P 500 futures September 2021 contracts. So these are the most current contracts that are trading. I trade the December ones. I prefer to trade a little bit out into the future. It gives me a little bit of room to mitigate any issues that may come up. But in any case, looking at the daily chart right here, you can see that we got a little bit of a green candlestick on the daily. That's good. If we look down at the Stochastic Momentum Index, which is the first indicator just below the candlesticks and the pricing, you can see the momentum is beginning to cross over just a little bit. Okay, that's a good sign, right? The previous candlestick before today, which was Friday, was a pretty big day. They usually are pretty big days coming out of the hole like that. So that was a nice profitable day. And then the momentum's starting to look like really prime, right? The Big Daddy forecast is saying things are going to still go up. It's still forecasting, predictive indicator forecasting, the price is still going to go up. Okay, the VIX, it's kind of leveled off here a little bit. Let me take just a quick look at what was the VIX before. Yeah, so the VIX was 1856. Of course, it's still showing 1856 because this day's not over. But the VIX went from 2167 back at the lowest point about 2 days ago, and now it's down to 1856. That's good. Remember, VIX moves opposite of price. So VIX has come down, prices go up. When VIX goes up, price comes down, right? So this is looking pretty good. So I think at least today, which is really Monday, right? Even though Sunday night the market opens for futures, it's recorded for Monday already. That's why it says August 22nd up there, even though, it says August. Yeah, even though today's, it's kind of weird the way they do the calendar here. But anyway, yeah. That candlestick is really for tomorrow, right? That's going to be tomorrow's candlestick, which is really the 23rd. So anyway, I think we're looking pretty good for some more upward pricing, at least for another day, right? Maybe even two. Okay, so that's what's going on there. Let's take a quick look at what I got going on here. So you can see this was upper left-hand corner. This was right after the market opened, 5:01. And you can see my position was down $50. Now that was those 5 contracts you're seeing there. In the middle of the screen you see a stop, just a plain old, not even a trailing stop, just a plain old, plain Jane stop loss. Okay, I'll get into a moment why that is. Why is that not a trailing stop like you normally see in my other videos? Why is that a stop loss? So look to the right there on the right side of the screen. You see some yellow rectangles. You see the profit loss opens was $50 negative, right? It's in red. Well, when the market opened, it gapped down. Not really gapped down. It wasn't a gap down, but it was down a little bit from my average price, right? You see my average price there at 4428.5. But when the screenshot was taken, the price was at 4426.50. Okay? So I wasn't sure which way the market was going to go. Sometimes you get a day or two out of the hole, and then it'll pull back. It happens sometimes. Though I had pretty good pretty good confidence that Sunday night, Monday was going to be an up day. You still got to pay attention, right? Just in case. And remember, futures, they're volatile. They're moving around a lot. So I threw in a quick stop loss order. And tightened it right up against the bottom side of the pricing, right? So I wasn't going to take any chances. Remember, on this channel, we're about making money, right? We keep our losses small and our profits big. That's the goal anyway, right? Let's take a look at the next screenshot. So now you can see the stop loss kicked in. Because the price, remember, I was long, and the price worked against me, was going down. It hit my stop loss at whatever it was, 44.26 something. And you see I have a loss for the day at 37.50. Okay? So that's what my loss was. So what did I do? Mitigate those losses in a hurry. Or I should say limit. That's what a stop loss is. Just a plain Jane stop loss is limiting your losses. right? Where a trailing stop is locking in your profits. Remember, you use a trailing stop really primarily to lock in your profits. You could use it as a stop loss too. Technically you could do that. But generally, if I think if I got something working against me, I'm only just going to slap in a stop loss, deal with it, get it closed, bang. Now, I don't like to have a stop loss too tight because you got to give things the room to breathe, right? You got to give the market room to breathe. But on this one, because the market just opened, I wasn't sure if we were going to get some weird kind of price action moving down. I said, forget that, closed it. I took a $37.50 loss. Okay, that's a lot better than letting it go into a big loss. And then I waited a while. Okay, next screenshot. Now we are 45 minutes later, and you can see that I have 3 contracts. Okay, I'm up $6.25 on the position, but I'm still down for the day $31.25, right? So why did I turn around and take 3? Well, because the candlestick changed. Right? All the other indicators and the other study and other things I do outside of just charting, okay, there's other things going on behind the scenes, guys, but other than, everything on the technical side here is saying you're good to go. Long is good. Okay? But the candlestick, that's the most immediate feedback. Candlestick was green. I'm like, okay, small position, 3 contracts, let's see what happens. Okay, next screenshot. You see I'm up a little bit more. Now it's 722. I'm up 17.50 in position. I'm still down $20. I'm still just holding 3 contracts. Right? I'm just being patient. This is just about being patient. What's the market going to do? What's going on? Okay? A little while later, like, I don't know, whatever it was, 20, 30 minutes later. Still the same 3 contracts. Now I'm up 28.75. Market slowly kind of just meandering. Sunday night, slow, kind of slow. And my profit loss for the day up to this point is a negative 875. Okay, so we're working back on the loss. Right. Now we are about 10 after 8. Now you'll notice my contracts are now 10. I went from 3 to 10. That's right. I said, okay, I like what I'm seeing. I added 7 more contracts. I got a total of 10 going on. I'm up $70 on the 10 contracts. And my profit loss for the day is now positive $32.50. Okay, so next screenshot. Just a little bit later. Same 10 contracts. Okay, you'll notice I don't have a trailing stop on there. Some of you may be saying, what the heck, man? You're breaking your own rules. I thought you always put trailing stops in. What's going on? Hold on for a second. I'll get to that in a minute. Okay, so looking to the right there, you'll see I still got the same 10 contracts. The position's up $132.50. The profit loss for the day is now $95. I didn't take a position to for the sole purpose of getting back my losses. That's not what I'm doing. I'm just trading. Right? I'm just trading because I believe a long position is a good position to take right now. Right? It's not really about I've got to get my revenge. It's my grunge trade. Yeah, that's a bad attitude. You don't want to do that. Just trade according to what you believe is going on with whatever direction, long or short. Okay? In a very sideways market, okay, you can think about options. All right? So I try not to get into any, it's a grunge trade, I got to get my money back. Yeah, don't think like that. Just move on. Okay? Now, why don't I have a trailing stop? Well, look at my average price here to the right, 4434. And the price of the market at the time I took this screenshot was 4437. So there's not a whole lot of room between those 2 prices. Okay? And I want to trail like kind of minimal $2. That's kind of tight. Okay? Could probably trail a little bit bigger. But a minimum of like a $2 trail. So I could trail from 4437.50 $2. That means that my trail would stop out at 4435.50. And I would make a little profit there, but it wouldn't be much, right? And I don't even know, it would overcome commissions, but not by much. And so that's why you're kind of in this, sometimes you're in this gray area. Now, does that mean you should just leave a position hanging like you kind of see me doing here? Not necessarily. If you're new to trading and you absolutely wanted to be absolutely positively make sure that you're not going to take a loss or, you're a little bit nervous about trading, go ahead, put your stop loss down in there or even your trailing stop. Just be aware it may stop out at a very little profit, and that's okay. It's not necessarily a bad thing. You're learning as you're going, and you're getting more confident, and your trading's getting better, and you'll kind of grow in your trading, and so that's not necessarily a bad thing, right? So just because you don't always see me as a trailing stop, you almost always will, though. You're almost always going to see either a stop loss if I think the market's working against me, like in a way that's making me a little, dare I say, a little nervous. I want to cut those losses like quick. Okay? Then you'll see a stop loss. But usually you're going to see a trailing stop. That's because I'm locking in profits. Okay? I mean, for those who've been watching my YouTube channel, you know how I am. Trailing stop, lock in the profits, baby. Right? Lock it in. All right? So the price difference between where I was at on this screenshot and where the market was not quite ready for a trailing stop. Need a little more room, and then I'll put the trailing stop in there, okay? So sometimes there is that gray area, where I don't want to say you're sweating it out, but it is that area where you're kind of waiting to see the market move enough in your favor where you could put your trailing stop in with some confidence. Okay, I want to move along, so I'm trying to keep this video short. I do want to take a quick look and show you guys at crude oil, because I do trade this futures product too. In front of you is the monthly crude oil. Okay, look at that huge candlestick, big red candlestick for the month of August. And look at the Big Daddy forecast pointing down. Look at the momentum, stochastic momentum pointing down. Now the OVX at the very bottom, for those that know what the VIX is, that's the volatility for the S&P 500. Well, the OVX is the volatility for crude oil. Some of you didn't even know that existed, am I right? Come on, admit it. You didn't even know there was a volatility indicator for crude oil. Well, there is. It's called the OVX. And it's just as helpful as the VIX is for the S&P 500. So I noticed that the volatility is a little bit up here for this month. And that makes sense. The price is down. Volatility goes up, price goes down. So everything on the monthly chart is saying get ready for a big decline in oil. Okay, and I already took one trade, I think last week, and I think I made like $100. It was a kind of a smallest trade. I just wanted to feel what was going on, and I made $100. Okay, so let's look real quick at the weekly. Unfortunately, I closed the stupid window, and okay, weekly. Here we go. Weekly's in front of me. Now the weekly, you can see that the Big Daddy forecast, just look at the pricing. From all the way back there, 1, 2, 3, 4, 5, 6, 7 or 8 weeks ago was the top in crude oil, right? Way up there at $75. And now it's all the way down to $62.76. So crude oil's lost a lot of pricing, a big price decline, right? For the last 7 or 8 weeks. And you can see below that, the Big Daddy forecast, it's kind of at the bottom, but it's still pointing kind of a little bit down. And momentum hasn't rolled over yet, right? It's still going down. And volatility is still up. But weekly's getting kind of to the place where we might see a little rebound, maybe coming up soon. But remember, that monthly is an ugly looking picture. Or, if you're a short side trader, it's a beautiful thing. Okay, which I am. I do short side and long side. Okay, crude daily. Daily chart. Lots of down. Oh, gosh, look at this. Lots of red on it. But, look at the Big Daddy forecast. It's saying price is going to go up. Stochastic momentum. It hasn't crossed over yet, but it's kind of in the ballpark. Okay? And the volatility at the bottom of the OVX, definitely we see an increase in volatility. Obviously, over the last quite a few red days there previous to today's green candlestick. So volatility naturally would be up, right? So what does this all say? Well, it says on the daily chart that we might be coming up on a long side trade. Okay, and the weekly's kind of getting there too. But that monthly chart, guys and gals, on the crude oil, it's looking mean. And I really see a short side trade going to come up after whatever this little, if we get a few days up or a week or two up or whatever, after that, definitely see a short side trade. So in a nutshell, what I'm saying about crude oil is I'm going to keep a close eye on it. I don't have a lot of confidence to trade long on it right now because there's a whole lot of red on that screen. But I'm going to definitely keep an eye on it. If I take a trade, I'll let everybody know, okay? Okay, so I had to throw this in kind of last minute. I was getting ready to edit the video, but this, wanted to show you guys this last screenshot before I close up the video real quick. upper left-hand corner, 9:04 Central Standard Time. You see now I have a trailing stop in the middle of the screen, right? Circled there in the middle of the screen. A -10, because obviously I'm trying to sell, right? This was long, so I bought long, right? Or buy low, sell high, kind of traditional, more traditional trade instead of a short side to long side trade. So you see, trailing stop 10. So remember I said I wasn't really ready yet. I was kind of like in this gray zone where I really wasn't ready to put a trailing stop. Well, the market moved up enough to where I finally said, okay, we're good. Trailing stop, put it in place. I get a $2 trail, which admittedly is a little tight, but I'm okay with that. And to the right there, you see the yellow boxes, rectangles, positions 10 contracts. The profit loss is 245, and the profit loss for the day was to 207.50 because I had to overcome that little bit of loss earlier. So that's why the profit loss for the day is a little bit lower than the open position profit loss. Things are looking really good. As I close this last screenshot here, I haven't been stopped out. So, either way, if it comes back and hits my trail $2 down, it's going to be a nice little tasty profit. And we'll hopefully move on to more profits. Okay, that's it. Now it's official. Talk to y'all real soon again next time.